Let's get back to Jim Rogers here with us at our Asia headquarters. Jim, we've got a couple of emails, and this is Dave again, writing in from Kiama in Australia. He says, if you were down to your last million or two, which commodity would you back?
Well, I would find something in agriculture probably, or maybe silver. Some of the products that are still very, very depressed on a historic basis. You know, sugar is still 70% below its all-time high. I don't think I'd buy it today, but I'd certainly be looking at it. Cotton, coffee, silver, these are things that are very depressed. These are not necessarily recommendations to run out and buy today. I'm saying this is where I would start looking if I only had $1 million. I wish I had $1 million, then I would head out and look for those things.
Okay. All right, Nance?
Okay, you're probably going to need a few more than just $1 million for this question, but Shirley Lim is asking, may I have your views on the property sector in Singapore? Do you see further uptrend? What do you think of the luxury sector, which seems to be lagging behind? And which country would you buy a property in? And when? Wow, lots of questions there. Give it your best.
The Singapore government has recently tried to do everything it can to slow down or calm down the property market in Singapore, so I would go with the Singapore government. They've been very, very smart and successful people over the past 40 years, so I would not be buying right now. They want to cool things off. Which country? I would probably try to find an agricultural-oriented country, or certainly a natural resource-oriented country where prices are still depressed, and there are plenty of those if you look around the world.
All right, Dave is on a roll here. He's got another one for you. He says, do you foresee hyperinflation, one, and two, do you have an estimate of what true inflation is in the U.S. right now?
Well, there's no question that the U.S. is vulnerable to hyperinflation down the road, or certainly the inflation we saw in the 1970s. I would expect that to come back in the foreseeable future, certainly in the next few years. The true inflation rate in America, it's certainly at least 6 or 7%. The U.S. government lies about it, as you know. Everybody who shops knows that prices are up, everybody except the U.S. government, and I wish we knew where they shopped so we could shop there too and get good prices.
Jim, Jeeva is asking, what percentage of one's portfolio would you suggest to be invested in Asia, and what countries in a descending order?
Well, it depends on what you know. If you don't know where China is on a map, you probably shouldn't invest any in Asia. But if you know a lot about Asia and you know what you're doing, then you should probably have a lot in Asia, because in my view, Asia is the continent of the area of the future of the 21st century. Now, you've got to know what you're doing, though, because Asia is a big, huge place with 3 billion people. I'm not buying shares in any countries right now. Most stock markets around the world have gone through the roof in the last year, especially in Asia. Sri Lanka's up nearly 100%. China's up nearly 100% from a year ago. I don't like to jump onto a rapidly moving bus. I'm sitting and watching. The best way to invest in Asia right now, as far as I'm concerned, is to buy the commodities, because if China's going, if Asia's going to recover, commodities are going to go through the roof, and if Asia's not going to recover, commodities are still a good place to be, because everybody's printing so much money. All over the world, people are printing money, and that has always led to higher prices throughout history.
Perfect, printing money. This is Dan from Pembroke, Massachusetts. He says the U.S. has been buying back more of its own debt because Asia has stopped buying as much. What are the implications of this, do you think?
They're debasing their currency, Dan. I mean, I hate to say it, because I'm an American citizen just like you. America's debasing its currency at a terribly, terribly rapid rate. This has never been good in the long term for a country, or even the medium term. Sometimes it helps in the short term, as we're seeing now. It is helping in the short term, but longer term, I'm extremely pessimistic and worried about the fate of the U.S. dollar, because those people in Washington are doing their best to debase it.
Jim, Deb has got a question staying on the commodities theme about sugar. Would it be a good investment knowing that it has appreciated almost 100% this year?
Well, that's what I said. I wouldn't buy sugar right now, because I don't like to buy anything that's going through the roof. But it's still on the big picture, on a historic basis.
How far would it have to pull back or correct lower to present a good opportunity to get in?
You know I'm the worst trader in the world, a short-term trader in the world. I'm the worst market timer anybody's ever seen. I don't have a clue. Ask me next week. Ask me next month. Let's see how the world develops. I mean, if suddenly Israel bombs Iran, that's one thing. You know, if suddenly somebody goes bankrupt, that's another thing. It depends on what's going on in the world. I cannot answer that question easily.
All right, Jim, listen, it's been a pleasure, as always, having you on the show. Thank you for your time.
My pleasure. Delight. Thank you.
Okay.
Thank you,
We're
Manny.
talking to Jim Rogers, the adventure capitalist here on set at our Asia headquarters.